Good morning to everybody. Welcome in the Bank of Italy. It is a great pleasure to welcome all the speakers and participants to this conference on the ongoing digital transformations in the retail payment systems. The program is remarkable. There are many key issues that are of interest of both central banks and the private sector that will be discussed in these 2 days. I'd like to take this opportunity to thank the organizers of both the European Central Bank and Banca d'Italia for putting together such a broad and relevant array of topics. The fast evolution of digital technologies promises to deliver benefits, but it also creates new challenges for the payment system and its stakeholders. Today's conference is an opportunity to take stock of recent advances, to evaluate possible future landscapes in retail payments, and to discuss the challenges and the opportunities they pose to not only central banks, but to population at large. I'm sure that maintaining a continuous dialogue among central bankers to allow private sector representatives and academics to be part of this dialogue that will be a dialogue on the subjects that will be discussed in this conference. I'm sure that this will contribute to the efficiency and safety of our payment systems. The diffusion of digital technologies is having pervasive effects on our societies. Today, about 80% of the European population has a smartphone, personal computer, tablet, to navigate the internet. We use the internet to perform many fundamental activities that influence our behavior and productivity, such as communicating and searching for information. The rise of e-commerce is also having substantial and at times disruptive effects in many industries. In the last 20 years, this rise has been incredible. I still remember that the first paper on e-commerce was produced at the OECD when I was the chief economist there, and it was very difficult to convince my colleagues to write such a paper. They said, well, it is an interesting minor event that perhaps will be only relevant for particular relations between certain businesses, and we live in a very different world now. Digital innovations, such as big data and artificial intelligence, are used for medical diagnosis, in the transportation sector, to select the news that is reported on social media. The explosive growth of electronic devices controlled through the internet suggests that the Internet of Things will play an important role in our daily lives. As the youngest tech-savvy generations approach adulthood, the effects of these phenomena are bound to become even more significant than they are today. The digital transformation of our society has also changed the type of payment instruments we use. Indeed, the more we use digital distribution channels in our consumer expenditures, the more we need digital forms of money to pay for these transactions. But there is also a cultural change behind this process. Credit and debit cards are increasingly used in brick and mortar stores, and in some countries, banknotes are no longer the most common means of payments. Certain countries, there are no banknotes anymore, most likely. The highly dynamic landscape of payment systems is ever evolving. While new technologies, such as those used for instant payments, are rapidly approaching, newer ones are right behind. Last year, we held a conference here at the Bank of Italy on the applications of blockchain technology in financial markets. Now, what last year seemed to be a technology important but still in its infancy is now increasingly put to work in use cases. And there are other similar technologies that are being proposed, as we will see tomorrow. As with all technologies, it is expected to deliver efficiency gains. According to its proponents, some of these gains will come from easier diffusion of information and will have the potential of altering the same payment systems landscape. However, the extent of its impact is still uncertain, as many aspects of its practical implementation are yet unknown. Nevertheless, blockchain technology is getting a great deal of attention from practitioners and the financial markets, and it is used, as we know, sometimes in some perverse, I would say, way. Not long ago, the stock price of a British company more than tripled after newspapers reported the company's plan to add the word blockchain to its name. So large was the gain that the company felt compelled to publicly clarify that its development of blockchain products was still at an early stage of research and development. Thus, the digital revolution is posing new challenges to central banks, both as regulators of payment systems and as providers of money and payment infrastructures. Many of them are already being tackled, but many still lie ahead. Through significant investments in technology in the payments industry, both central banks and market operators increase the supply of efficient payment services and ensure their security and reliability to foster public confidence. Public confidence in electronic means of payments, in new electronic means of payments. In Europe, the establishment of the single European payments area, the SEPA, was a milestone achievement in this context. With widespread access to the internet, consumers are now continuously connected and have come to expect commercial and financial services to be available at their fingertips in real time. All over the world, we are seeing a rapid increase in the level of interest in payment solutions that allow money to be sent from person to person through instant payment applications. On 21 November, the Pan-European Instant Credit Transfer Scheme established the European Payments Council, established by the European Payment Councils, went live, thanks to the efforts undertaken by the payment service providers and automated clearing houses. Now, nearly 600 payment service providers from 8 European countries, Italy included, may choose to offer instant payment solutions based on the new scheme, whose scope will progressively span to include 34 European countries. To further facilitate the integration of the euro area and to complement the services of the automated clearing houses, last June the Eurosystem decided to develop an instant payment settlement system in central bank money, the target instant payment settlement. Bank of Italy will be deeply involved in its development. Dramatic technological advances in the financial system are creating new opportunities for payment users. However, they also pose new challenges for traditional intermediaries who are now exposed to heightened competition from digital platforms that also offer payment services. Banks no longer compete only with each other, but also with non-banks, and must deal with the challenges that stem from the developments in financial technology, fintech. In the European context, technology-driven transformations in the payment system are also supported by regulatory interventions that increase competition and innovation. In 2007, the Payment Service Directive introduced a new category of payment service providers, the payment institution. The new directive, the PSD2, which will take effect from January next year, paves a stable path towards further innovation by regulating the activity of third-party providers. These are fintech firms that offer payment initiation and account information services by exploiting the new business opportunities provided by technological innovation, positioning themselves between payment service providers and final consumers. The PSD2, while requiring banks to share customer information with TPPs, provides that the activity of the latter be authorized and monitored by the supervisory authorities. Thus, By fostering innovation and competition, the directive aims at ensuring a level playing field in the payment services sector and protecting consumers. Moreover, it focuses on the security of the payment services, with the objective of achieving a high level of harmonization through a common regulatory approach within the European Banking Authority. Under the PSD2, the EBA has been tasked with developing standards and guidelines that enhance cooperation among all national competent authorities. The Bank of Italy actively participated in the adoption of the new directive, supporting the government since the start of the Italian EU presidency in the second half of 2014, when the text of the PSD2 took shape. We are now fully cooperating at the European level, and we also chair the European Banking Authority's Standing Committee on Payment Services. We will continue to share our experience, both as a regulator and supervisor, to help ensure an appropriate balance between the public interest, security, innovation, and competition. The ongoing digital transformation in the payment ecosystem and the new regulatory approach are, as I said, posing new challenges. Oversight of the new payment systems will have to be carried out while new technologies and business models are introduced. They keep being introduced. At the same time, the oversight has to go on. The risks associated with these innovations will have to be faced, and these are risks that stem from vulnerabilities in the assessment, in the processing, in the storage of information, as well as those that threaten cybersecurity, which may impair the same public's confidence in the payment system. It is possible that all these challenges will push us towards a new paradigm in implementing policy and supervising the payment system in the new technological era. In this context, a continuous dialogue between regulators and the industry facilitates the introduction of innovations that have the potential of generating broad-based benefits. At the same time, risks and unintended consequences will have to be carefully evaluated and countered. Most of the issues we are facing today are covered by the topics that will be discussed during this two-day conference. I am confident that will not only provide food for thought, but also new insights on how to reap the benefits and how to counter the risks associated with the digital transformation of payment systems. Let me conclude with some open questions, the answers of which could outline the future landscape of the retail payments ecosystem. In the economy, digital means of payments are increasingly common. Today, we do not know whether they will ever completely replace physical means of payment or when this may be. It will depend on the preference of consumers and firms. As providers of currency, central banks need to make sure that they are at the technological frontier in their production, and as regulators, that people will continue to trust the system, be it physical or digital in nature. So, how should central banks promote trust in the payment system in this age of digitalization? What new legal and regulatory issues will be raised by the introduction of the new payment instruments? How will the necessary coordination of the different actors in the payment system be achieved in a deeply evolving setup? And how will the necessary stability of the financial system be maintained? I'm looking forward to learning some of the answers and to listening to the presentations, the panel discussions, and the keynote speeches that promise to make this conference particularly interesting. To close these welcome remarks, I'd like to mention that 30 years ago, here, under the strong encouragement of Tommaso Padoa-Schioppa, a major project was finalized in the Bank of Italy with the drafting of our white paper on the payment system. In a companion article, which was published in 1988, my late friend and colleague, Curzio Giannini, who was one of the main contributors to that project, observed that the payment system is, I quote, a complex apparatus, an apparatus of rules, of intermediaries, of instruments, a complex apparatus that serves a simple purpose. So complex, the apparatus, simple, the purpose, allowing the execution of payments in money associated with the circulation of goods and services. Seems very simple. As regulators and providers of means and payment, we have to ensure that the digital transformation of retail payments will encourage the exchange of goods and services among households and firms, helping them to reap the benefits of the new technologies and to share them widely. Thank you.